The future is global, green, and digital. Luxembourg is ready for it. By 2025, Luxembourg's ambition is to finance a sustainable future, putting qualitative growth, innovation, and stability at its core. Now, more than ever, financial services are essential to economic recovery. For decades, Luxembourg's multi-jurisdictional expertise has helped connect global investors with firms and projects in need of financing anywhere in the world. Located at the heart of Europe, Luxembourg will further expand its role as an EU hub for companies, thereby supporting a stronger European economy, job creation, and qualitative growth at home and in the EU. At the forefront of green finance for several years, Luxembourg has not only embraced the global trend towards sustainable finance, but has taken on a leading role. We will continue to strengthen our position as a key hub for impact investment and blended finance. Drawing on a long history of innovation, Luxembourg is committed to fostering new ideas and companies by providing a rich, supportive environment for today's fintech pioneers. It is leading the way for the future of finance. A stable country with a strong economy, Luxembourg is committed to ensure compliance with international standards and continues to provide international investors with the highest possible standards of protection. Our unique pool of multilingual and highly skilled talent provides the key to unlock Europe's large and diverse single market. Luxembourg will support the continuous expansion of its financial industry, and in doing so, is steadily building a first-class financial services industry that benefits Europe and the world. We're financing a sustainable future.
Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
Good morning and a warm welcome to this new episode in our Focus On series. 2020 is coming to a close, dare I say, finally. No one of us will regret to see it end, and yet we will live with the consequences of it for quite a while. At the very least, 2020 will have been an epoch-making year, and many generations of historians, economists, sociologists, and many others will continue to study it and write about it. After such a disruptive year, what will the future hold? To attempt answering this question, we are proud to bring to you the views of our Prime Minister, Xavier Bettel, and those of a distinguished panel of economic and finance experts. But we're also interested in your views, and we would like to involve you in this discussion. You are more than 700 people from Europe, obviously, but also from the US and Canada, where it is awfully early in the morning, so good morning to all of you, but also from Asia, Middle East, and our friends from Africa. To get you started, look at your screen. Below the live stream, you should see a space where you can type in questions that will be asked at the end of the panel discussion to our experts. If you do not see it, it is because simply you are on full screen, and you should reduce the size of the live stream screen back to where you found it on our website, and then you will see the space to ask the questions. Do not hesitate, go for it. We want this to be a lively discussion. And that also leads me then to another space, which is below the Q&A space, and namely that is for our Slido poll of the audience. We will be asking you 2 questions during this, and I will start right now with the first one, which should appear on your screen. The question is, what will dominate your business in 2021? Is it A, COVID-19? Is it B? And we will not see the answers yet. We will discuss the answers once we get there in the discussion with the panelists. But do please take the poll and respond to the questions. The pandemic caused by the COVID-19 virus called obviously for a very strong, if not even extraordinary, political reaction through lockdowns and many other measures. At least in those countries like the ones we live in, where politicians were more interested in curbing the infection rate than increasing their popularity rate. And we are thus very grateful that Prime Minister Xavier Bettel could find a time in his busy schedule to join us and to share his view with our audience. He could not join us live this morning because of the European Council meeting taking place today and tomorrow, but he does have a few very important messages. Let's listen to him. Hello, it is a great privilege this morning to be joined by our Prime Minister, Xavier Bettel. I don't think he needs much of an introduction. Everybody knows Xavier Bettel as the Luxembourg Prime Minister since 2013. So happy birthday, by the way. I think this is about the 7th anniversary of your government. I'm delighted to have you with us, and we are going to talk about your view of what is going to happen next year. Obviously, that is tainted by a lot of what is currently still happening. Also, what I need to remind our audience of is this interview is recorded 2 days before our Focus On session on the 10th of December, because the Prime Minister will be joining a European Council summit on Thursday. So our questions may not necessarily on one or the other topic reflect current affairs. But nevertheless, Mr. Prime Minister, Europe is currently feeling the brunt of the second wave of the pandemic. As a political leader who has to weigh many factors when making difficult choices, what words of encouragement do you have for our audience for 2021?
The first thing is, as you said, what is going to happen 2021? I have to admit, with the corona crisis, it is very difficult to say what is going to happen, when and how. You also said in your introductions that I have an European Council this week. I cannot tell you what is going to happen there, because with the Brexit there are still discussions, but we will come later on that topic. The fact is, we are in the middle of a second, even a third wave. It depends how you calculate the waves, but the fact is the figures are still very high. We note that the vaccines are coming soon in the next weeks, we hope, that the vaccines will arrive, but not only that they will arrive, because to buy vaccines is the easiest part. To get people vaccinated is sometimes more complicated. So also to convince people that they should get vaccinated. The fact is that for 2021, we hope that next year Christmas will be another, that the next 12 months will be different. Because it's very difficult, in fact, also to, sometimes people ask me, how are you going to take decisions, for example? The fact is, it's not myself. It's not only the government. We have to listen to specialists. We have to listen to doctors, to professors, to people who analyze wastewaters, who are able to be virologue, epidemiologue, all these different kinds of people, without forgetting also the if I would say, collateral damages of a crisis. So that means we have on the first ranking is health, and this will stay also on the first priority of the COVID-19 fight. But on the other hand, you have also all the collateral damages. I know economy is one of very important topic. We cannot say that we don't care about the economy, because we exactly know that if after the COVID everything will be broken down, not existing anymore. We have to rebuild everything up. So we need to have balances by having some lockdowns where we think they are able to reduce figures, even if it takes time, because it's not in the COVID crisis that you take decisions and the next day you have results, so that we are able to focus on some topics and trying to have also this solidarity, which is more needed than ever. Because, for example, respecting the rules or respecting the behavior or being vaccinated is not only to protect yourself, it's also to protect the people you like. And so I really would, if I could just give an advice for the next weeks, for the next month, is and I'm fed up like everyone. I cannot stand anymore this mask. I think everybody is bored with the mask, but it's all the efforts we did before. If we, in January, have again very bad figures and we have to take more strict decisions, we can avoid that by taking responsibility also now. So I know that the next days and next weeks won't be easy, but as soon as we have the vaccine, it's not finished, because then we have to vaccinate everyone and it will take time. But so that in the next months we will be able to get back to life. And so that's what I wish for 2021, by telling you that the fact is that there are so many unknown answers, because I have to admit, sometimes we take decisions by knowing at that moment just the information that we have. And it's for sure, if I would get back 6 months or 7 months ago, maybe I would have done other things, but by knowing it now. So we should not say, I would have done this 6 or 7 months ago. At that moment, it was the right decision. I think that is important, not to take decisions just because thinking they are good, but by analyzing where they are the most targeted, so they have the last impacts on the society, on the economy, on the psychology, because we should not forget also that it's a huge psychological impact also for persons to be isolated. And again, it's a terrible situation. I think in the 7 years, it's the most difficult to close, but also to open, because people think to open is easy. No. Always, because everybody wants to reopen as first, reopen as first, and then you have to take decisions. So it's a difficult time, but I've been elected not only to have good moments, I've been elected to take decisions, and that's what I'm doing. And if I'm not getting popular because I take decisions, it's my job, and I stand for that. And I don't take particular aspects, I take the general interest as the biggest consideration.
COVID will also probably be one of the main topics on the agenda of the European Council that you will attend on Thursday. What are the other topics on this agenda? And then once you have more or less overcome COVID, once Brexit has been solved either way, we don't know yet, what will be the topics that will dominate the agenda of the European Council next year?
Inshallah, if Brexit is resolved and COVID is over, because I don't think it will be for the next weeks.
But it will be resolved anyway.
Yeah, but not tomorrow. The fact is, and I don't know, I just remind you that Brexit is like, in Luxembourg we know the Sprangprozession in Echternach. So we jump a bit and then we go back and we jump and we go back. And the fact is, the Brexit is not good for anyone. It's bad for all of us, but it's even worse for the UK. So we have to know that. But on the agenda of the European Council, we have a huge amount of topics. Short now, relations with the USA, transatlantic relations, where we have to build trust and also to see us as partners. As you know, my country believes in multilateralism, so it's important to get back on the table. Then with Turkey, where we have to see that there is a problem of relations with Turkey, with Cyprus, and also with the neighborhood, so we need to have that topic too. Then we have the MFF, which is a huge topic also about the budget.
Financial framework.
Yes, the budget, the European budget, where we also have to a link to the rule of law, and that's a big debate, because some countries want to put us as hostage because they don't want to give a green light for the support of the MFF, which is useful for the countries who are the most hit by the crisis to get out of this economic difficult situation, and they don't want to have the rule of law, and it's a bit strange.
But it's what Europe is all about.
Yeah, but the fact is it's strange, because countries are complaining that they might get less money if they would do a breach of law. I don't feel guilty before I start to take a decision. So it's a bit strange that some country says already, no, we don't want that because we know that we are going to breach the rule of law. So I hope that we will at the end be able to remember that the backbone of this European Union is law, it is values. It's a peace project. We should not forget that it was signed in 1957 between countries where we were in war just 12 years before. So we should never forget that. It's respect, it's understanding, and it's having a right to have justice working also in those countries. Then we have a big topic, which is the climate change. We need also to have these ambitious goals where Luxembourg belongs to this country, where we know that what the decisions we are going to take today are going to be the problems or the standards of living of the next generations. So if we are not able to take decisions today, we are going to leave a disaster to the next generation. So we need to be ambitious. And there the finance are so important. You know that Luxembourg was able to create all these sustainable finance objects. I was here with Mr. Hahn also for social bonds. So all these social, sustainable, really all this different finance view also for people from the outside. They think finance is just finance. We are able today, through public and private, through the system that we have in Luxembourg, through the products that we have in Luxembourg, to have a joint public-private partnership, in fact, in finance instruments, where we're able to get solutions on sustainable goals that we want to give, to have these green bonds, to have all these different products. And so this is also where you can bring, in fact, business and common goals that we have together really to get profits of, but not profit now just in the mind of finance, but profits also in the mind of the society. And so that is what is for me so important also in those things. And then we have also the COVID, where we need also to be aligned, because for the moment it was very difficult. We have 27 countries now, with the UK starting on Tuesday today to do the vaccine. So it puts us under pressure, because people say, why are they able to do the vaccine? Is it better to be outside the EU so you get vaccinated before? But the fact is, if the EMA, which is our agency for medicines in Europe, thinks that they need more control, I prefer to get trust from people, even if it takes 2 or 3 weeks longer. But at least that we have a product afterwards where the guarantees for the patients are much better than to say in 24 hours we have all the guarantees and it's okay. So maybe we will just be able to get the vaccines at the end of the year, but I prefer to have more time, but to have more guarantees. So these are the topics on Thursday, and usually there are always 1 or 2 elephants in the rooms, so that means we don't know, but they will come, and because of the last news, and we will start to discuss about them. But I tell you that the Brexit, it's not over. I don't know how we will have a deal, and afterwards especially it is important to have also the mechanism to control the deal. We cannot accept a deal where afterwards we are not able to check if it's respected or not.
What are the main lessons that you draw for the future from the current crisis?
A few things. The first thing is to see that, and I'm very proud about that the digital infrastructure in Luxembourg are good. Where we had learning yesterday, we have e-learning today. Where we had health yesterday, we have e-health today. Where we have, I won't give the brands because I already did it in the press conference where they said, why are you quoting this supermarket? So where we had yesterday, we have today Luxcaddy or the Lux Shop, Let's Shop, that is these initiatives where you're able also to do these things. I have all my meetings nearly through WebEx. Nearly all my government meetings since a month are through WebEx, so no physical contact with my other cabinet members. So these are all things that I wouldn't be able to do without a good IT infrastructure. So we see that the economy also is working. And when I speak about finance, without the IT sector, there wouldn't be no finance today. And so it is important to see all this linkage and all this invested money that we did the last years were important to be able to have this modern infrastructure also today where we can trust on. But this will never replace human contacts. So I realize now how much I would love to hug someone, where I would love to spend time with my mom. She's She's vulnerable, she's at the age and she's got some health issues, so it is important to realize, but I did it already before, not that I'm that rude, but it's just the fact that you realize how much you missed this gesture who were normal before, where you didn't think that how much you would miss them. And so what I would learn from this crisis is that the first thing is it's good to invest into infrastructure, even so the underground investment, if you can't see them, are very important, because as politicians very often you say what is important is people are able to see what you do. But when we do infrastructure which are under the ground, they are also important, because without the infrastructure it's not working. And to continue to invest also in this development of the IT, of the data, we see that the data will be the fuel of tomorrow. So all these different modern aspects that we are needed. But on the other hand, what I've learned, but I did it before, is that you need to take time to listen, and then to take decisions. You shouldn't take decisions and then listen. You should take, you are, as politicians, you should be able to listen, you should be able to take decisions, and then you have to be able to explain them. It's not easy to explain all of them, because it's sometimes not very logical, but we have to decide, and by taking decisions, I know that half of the populations are in favor, half of the populations are not in favor. But this moment, it's not to be popular, it's to take decisions.
Before we conclude, let me ask you another question that is certainly very high on the mind of our audience from the financial services industry. The crisis has led many governments around Europe and around the world, in fact, to increase dramatically their spending for obvious necessary reasons to face this pandemic. How are they going to pay for this debt? In Luxembourg, are we going to expect increased taxation in 2021?
We want to avoid every raise of taxes, so it's no. We don't want to do this. I know that for some countries and for some political parties worldwide, we should be first raising taxes. Taxes is a poison for the moment. Persons, physical persons and companies are hit by a crisis. If now we think that by hitting them again by more taxes is a good idea, I don't think so. We are lucky, and I know I was not popular also at the beginning of my first mandate, so I know it's like a wave too. The fact was that we take decisions about the budget, to do sanitary cleanings of the budget by making some cuts, because we thought it was important to get more safe and more balanced budget. And Pierre Gramigna was also not very much appreciated. But without that, we wouldn't have the AAA today. We wouldn't have the AAA today. And when we did a credit, when we rent money for the moment, I think it's the best invest. If I do a calculation and I realize that to having a deficit now, or not, but making a credit now, is used to spend into the economy, it's much better invested money than leaving a dead economy and having no economy at all. Rebuilding economy will be even more expensive than investing now in the economy. And the only thing is we don't know how the third wave or the fourth wave will come. So if we have the end of the tunnel, the closer the end of the tunnel comes, the better it will be for the public finances. But I think that maybe we will have to cut some projects, or to say these projects will have to be late for later. I announced already that some things we want to do this year might be for next year, or for two years, or maybe for later, or maybe not in this legislative period, because at the beginning, when we planned the budget, we had no planned a crisis. But I think that this invested money now is the best investment we can do. And when some people think that we should not invest money and that we should just raise taxes, for me it would be the biggest error. We should be a country where people can trust that we will do everything to avoid taxes in the next months and years, where even companies and people need to recover and not to be, in fact, hit it a second time.
And then to conclude, let me ask you one final, more personal question. That is, what will be at the end of this year, on the 1st of January, your resolutions for 2021?
I usually never have resolutions, because I know that the resolutions I decided on the 31st of December to start on the 1st of January, the 2nd of January, they are already breached. So I won't promise, I always say I will do more sports, I will eat more healthy, I will do this. These are the common things. I really hope that next year will be a year where we will be able to have again a normal life, to get more liberties. I'm a liberal, and I know how tough it is to cut liberties, to civil liberties to persons, not being able to see who I want, how many I want, when I want, where I want. These are limits I don't want. So, in fact, I do a common wish for all, being also a big wish for me. It's to get more normality in our life. This would be my biggest wish. And the other wishes, I know that it's very difficult. So I prefer to continue what I'm doing, to trying really to get a normal life back. That's my biggest resolution. And then also to take more time sometimes. That usually you are always on the rush, and what is important is also being able to take more time with the persons you like. And for the moment, you realize how important it is. So maybe that next year, when I will be allowed to do it, I will be able to take more time with the persons I miss the most now.
That must not be easy as a Prime Minister, certainly. Well, thank you very much for taking the time and sharing your very candid views with us and our audience. We very much appreciate, and we wish you, your husband and your mother all the best for the coming year. Thank you very much.
Thanks to you, and also to all your audience, all the best. Sorry for not being here. You will sit now in the meeting I'm sitting in Brussels, and we will do the best to represent not only Luxembourg, but our common values and our common interests. Mr. Mackel, grosse merci.
Well, I hope that you enjoyed the views of our Prime Minister, as refreshing and authentic as they certainly are, as much as I did and as our panelists did, whom I will present in a minute, with whom we will be discussing the topic and the question of 2021, more turmoil and uncertainty, or a new beginning. It's a great pleasure to be joined here by a panel of distinguished speakers and, dare I say, also true citizens of the world, because we have with us Raja Mekwar from Morocco originally, but she has also spent a large part of her life in France, where she studied, including at elite schools like HEC and INSEAD, is today leading the private equity activities of a Luxembourg family office, has been also the leader of the Luxembourg Private Equity and Venture Capital Association. Thank you very much for joining us. Keith O'Donnell in the middle, he's an Irish, by now become a Luxembourger, has been studying in Belgium as well, and is the founder and managing partner of one of Luxembourg's leading tax advisory firm, Athos. And then we have with us Yves Nosbusch, who's a Luxembourger, but has also spent a number of years abroad studying in multiple different countries, ending with a fantastic PhD in economics from Harvard University, and then went on to teach at London School of Economics and joined the Luxembourg part of BNP Group, BGL, BNP Paribas, in 2012, where he is today the chief economist and has many other different functions. So all of you, a warm welcome. We will be discussing, first of all, what the Prime Minister said. I will be getting the reactions of our panelists, but also what you have said in the first poll. And I remind you also of the possibility to ask questions to the audience via our website below the live stream screen. So don't hesitate, go for it. At the end of our discussion, there will be time dedicated to the questions to the panelists. But let us first turn to the reactions of the panelists to what the Prime Minister has said, and maybe start with, obviously, the ladies. Raja, what do you take away from what our Prime Minister said?
Well, I love the way he speaks, I have to say, and I think I would like to comment on two levels, one as an investor, another one more personal. I think as an investor, the fact that he mentioned the importance of IT infrastructure and in general good infrastructure investments is very important and shows the success of the public-private partnership in Luxembourg, which actually is not always the case, and which also shows the importance of long-term horizons when you invest. So I think the fact that Luxembourg is well equipped has allowed it to deal very well with the pandemic in terms of business continuity. On a more personal level, because what you didn't say is that I hold a British passport, is that I felt very proud and enthusiastic and almost also a bit emotional about what he talked about as a human, his struggles with the current situation. And I think it shows that his mindset and values are very much aligned with what we want to be as investors, focused on social welfare and well-being of society beyond any financial performance. So I feel very proud to be here, being able to invest from Luxembourg as a platform. So I look forward to becoming Luxembourgish.
Keith, what do you take away from what the Prime Minister said?
Well, I kind of picked up on two things that I thought were very interesting. The first one was around the EU political agenda. And I thought it was very interesting the way he talked about all these other subjects. And I think there's an interesting disconnect there on the Brexit subject, whereas I think from the British side, it's considered to be extremely important. And there's a presumption that for Europe, it's extremely important. Whereas I think when you hear him talking, you can see there's a whole series of other issues. And even personally, as a European, I would say the rule of law question to me in the long term is far more important than Brexit. So I thought that was interesting. The second part that I thought was fascinating, almost mind-blowing, was the intensity of reaction to the whole vaccination question. The idea that somehow you judge the UK versus Europe by who does the first jab. And we're talking about a couple of weeks difference after 10 months in lockdowns, slowdowns and everything else. I thought that was interesting, but I think it's also consistent with the market reaction to vaccination. I think there's deep emotion behind this. The second point I have to point out as well is, as a tax advisor, it's not often that I get to hear a Prime Minister describing new taxes as poison. Now, I think he has a point, and I think it's very consistent with the kind of consensus coming from the IMF, the OECD and other bodies, which is to say we need to let the economies recover before we start applying new taxes. Now, having said that, I think the Prime Minister is also in the fortunate position that the current projections are, even with everything that's been invested this year and not collected as taxes, the Luxembourg debt to GDP ratio looks like being around 27%, which by international standards leaves quite a bit of headroom.
Yeah, and on the vaccine, maybe we should remind our British audience that the vaccine that they are touting in Britain has been produced in the European Union more specifically. Yves, what do you feel inspired by?
Yes, I would actually also like to comment on the policy response to the crisis. And so I think I always like to take a little bit of a step back on these questions. And if you think about economic history, I think one of the great lessons in economic history is around the mistakes that were made during the Great Depression in the 1930s. And particularly the lack of policy response at that time, which led to mass unemployment in the US and Europe, across the world, and very, very significant falls in GDP. So I think the good news in a way is that this lesson has really been learned. And I think governments around the world know today, and they do this very well, that if you're faced with a major crisis, you have to respond, and you have to respond in a very big way, typically both on the fiscal and on the monetary side. And I think this is exactly what's been done today in Europe, and I think that's very good. And so if you look at the mix of measures, there's on the fiscal side, there's a lot of stuff going on around government spending, partial unemployment measures, very important, I think, to keep a lid on unemployment, direct subsidies to small businesses to help them survive through these difficult times. So those are more local measures, and we've had a lot of those in Luxembourg, and I think they're very welcome. And then there's, of course, the monetary policy response, the level of the European Central Bank, which has been keeping interest rates very low and provided massive liquidity injections, which, again, I think is extremely important in this environment.
Good, and now maybe let's turn to our audience's views. The first question, here are the results. What will dominate your business in 2021? And we clearly see that nobody feels bothered really by Brexit. I suppose that the 4% that consider Brexit as dominating their business must be some of our British friends that still will feel the brunt of whatever will be coming out of this week's, next week's, or whenever's decision. But if we can go back to the slide, we see that 1/3 nearly equally distributed between COVID-19, digitalization, and sustainable finance. Any quick reaction from the panel? Very quick.
But I think it's a tribute to Europe, because it means people don't feel that the exit of the UK is going to create any,
I think it also probably is that the financial services industry, A, has been well prepared, B, anyway isn't covered by a deal, so Brexit may not necessarily affect them as much. And as Keith before said, that Brexit may have been all-consuming in the United Kingdom, but certainly wasn't in the European Union as such.
Yeah, if I could maybe just react, I find it very encouraging that sustainable finance has is so high on the agenda of so many people, because I think this is also an opportunity, this crisis, and the recovery out of the crisis, where there will be a lot of investment. I think it's an opportunity to make this investment sustainable, to put focus on that, and I find it very encouraging that so many people see this as a priority.
And we will certainly come back to this topic later in the discussion. But let me now maybe turn also to the second question we wanted to ask you, and that is looking towards 2021. Will the growth rate in the Eurozone be A, negative, B, between 0 and 2%, or C, more than 2%? You can go and take the poll, and we return to our discussion, where we will now look at where the current situation is. Obviously, the COVID crisis has thrown us into a historical crisis. As we discussed, many generations of historians and scientists and economists will look at this many years after we are going through this. Where are we today? What is the damage? What are the scars that this crisis will leave? And for that, maybe, Yves, if I can ask you to give us your assessment on where we are today.
Yeah, so, 2020 clearly has been a very difficult year, but I think it looks actually like it's the recession and the contraction is going to be less severe than what was feared at some point. So if I start maybe with the Eurozone. In the Eurozone, we have had a very sharp contraction of GDP in the second quarter, followed by a very strong rebound in the third quarter. And now with the partial lockdown measures in the fourth quarter, it looks like we're going to have another contraction in the fourth quarter, albeit less severe than the one in the second quarter. So overall, there's clearly going to be a drop in GDP this year, significant. We estimated at around 7.5% drop in GDP for the Eurozone as a whole this year, which is slightly more optimistic than the European Commission, which has a forecast of minus 8%. But in any event, significant. In the US, the US has in terms of contraction GDP, has handled this, has done a little bit better. So they will probably have a contraction of GDP of the order of 3.5% this year. China, which got through the crisis early on, will actually probably have an expansion of GDP of around 2% this year. In Luxembourg, contraction of GDP probably around 4% this year. So less severe than in the rest of the Eurozone, which is mainly due to the fact that the financial sector has a very large weight in the Luxembourgish economy, and the financial sector can, of course, to a large extent function through teleworking solutions. So that's on the GDP side. On the labor market side, there has been a rise in unemployment, also in Luxembourg. If I start with Luxembourg, perhaps. So we had an unemployment rate of around 5.3% before the crisis. It's gone up to 6.4%, and it will probably continue to rise somewhat into the next year, hopefully peaking around no more than 7%, which is still a substantial rise. But it's significantly less than what we expect for the Eurozone, where the forecasts are more of a peak around 9.5% of unemployment. So what's remarkable about the Luxembourgish economy is that in spite of this rise of unemployment, the Luxembourgish economy has actually created jobs on net this year. And I think it's going to be the only economy in the Eurozone that has managed to do that. We will probably have created around 2% growth in jobs corresponds to around 9,000 jobs, obviously given the size of the economy. And so this may seem paradoxical in light of the rise in unemployment, but the reason, of course, is that the jobs have been created in specific sectors, whereas other sectors have been forced, in some cases, into layoffs, and the skills are not easily transferable in some cases. So what I would maybe like to finish with, just on this assessment of 2020, I think this crisis is very different in nature from the 2008 crisis. 2008 crisis was a credit crisis. 2020 was a crisis where we've had both a shock to aggregate demand through lockdowns and a shock to aggregate supply through disruptions to global supply chains, through disruptions through operating models, etc. So both very large aggregate demand shock and very large aggregate supply shock. And so it's a very different crisis in nature, and the response has been different. The role of banks also I would like to say something about. So I think the banking sector as a whole is really determined in this crisis to be part of the solution. And I can certainly say that our teams have been working incredibly hard since the beginning of this crisis to help alleviate the impact of this crisis on the local economy.
Good. Well, serious situation, but there are some silver linings, if I get your words correctly. Raja, maybe to you, what does this mean from the investor's point of view?
I was listening carefully to what Yves was saying, and I think for us this year, and it started actually before the pandemic hit us, we were all expecting some sort of correction or adjustment to the cycle, is there's no more blanket approach. So I think to your title, the greater the uncertainty, the deeper the conviction has to be. So I think we've been scratching our heads much more in terms of defining sectors and areas where we want to be. And you were mentioning sectors that were more hit than others. And I think there's a great divide with the current situation, which forces you to really pick and choose areas and assets where you have a conviction that they could perform regardless of the situation at large. And another filter for us is very important, the rising intervention of governments in our economies means that we try to invest in areas that are not necessarily directly affected by that, and in companies that are also resilient, whatever the cycle. And so in a sense, it means focusing on what is the must-haves that society needs to live, as opposed to what are the nice-to-haves. And of course, the big winner of all this is tech in things that enable this lifestyle. Health, of course. Tech, but I mean, it could be health tech, but it's the tech in general as a digitalization of our lives is key. So for us, it's more conviction, more granular approach by sector, by region, by asset class. And of course, I hope we discuss it later, but I would like to hear Yves' view on the disconnect between the real economy and the financial markets, because I'm more a private equity person, but I've been extremely rattled by what's happening in the stock markets lately.
Yeah. Keith, what do your clients do, or what do they say? How do they experience this?
Yeah, I think, and I was thinking about this, and maybe the big message is there's a huge diversity. So one way of looking at the diversity is if you take the sectors, and this is what Raja was talking about. If on the one hand you say you have the hotel industry, the hotel industry, some of our clients, their only priority was survival. Their cash flows were savaged. So they were just looking, we furlough people, we shut hotels, can we keep going financially? Yet within that sector, there were some of them that had access to financing and were saying, this is a great opportunity to buy into assets that finally are at an affordable price. So you get even the diversity within the sector. Then at the other extreme, if you take the tech sector, some of our clients were able to raise money very effectively because their revenues suddenly started to grow if they were in some way connected to the solution to some of the COVID issues. And the valuations have just kept clicking up, and Raja will confirm this. So some of them were saying this is actually a great time to raise money, to continue investing in our business. Then at the other, again, within that sector, there's diversity because we had some of our clients who are venture capital funds, and they were saying we have to take a very Darwinian view to this. And we split our investments into different buckets, and we say some aren't going to survive this. We basically cut off the funding because we can't afford to keep them going. And at the other end, there's ones that are benefiting from this, and we will invest heavily in those. So it's a tremendous diversity that sits under these macroeconomic numbers, and that's what makes it a fascinating time to look at all of this.
Let's turn maybe towards the future and have a look at what our audience thinks about the growth rates for next year. prudently optimistic is what I would say. 59% think that growth rates in the Eurozone will be between 0 to 2%. Only equal parts think it will be either more than 2% or even negative. Yves, what do you make of this, and what are your perspectives for 2021?
Well, on that categorization, I'm definitely in the optimistic camp. So I'm actually quite sanguine about the outlook for 2021 and beyond. I think one key point here is that the effects of COVID will largely disappear with the introduction of mass vaccination. So I think it's important to keep in mind that there is actually a lot of pent-up demand, and a lot of people have accumulated a lot of forced savings. Many people have a lot of forced savings at their disposal that they will be able to spend once there will be less severe restrictions. And so I think we're actually, as Keynes might have put it, the animal spirits, I think, are likely to be awoken by the introduction of mass immunization. And so under the assumption that we will get there sometime around the second half of next year, I think the growth outlook for next year and for beyond looks actually relatively good. And so we have a forecast of 5.6% growth for the Eurozone next year, so significantly more than the consensus here, and also more than the consensus on the street. The European Commission has a forecast, just to compare it, of around 4% for next year. For Luxembourg, around 4%. Obviously, the contraction was less severe in Luxembourg this year, so the rebound will also be less strong next year, but still very, very strong growth forecast for Luxembourg. The US, around 3.5%. Again, same idea. Smaller shock, less strong rebound. So there's these pent-up demand I've talked about, which I think will be a key factor in this. And there's another key factor, which is that the policy response is very asymmetric. And this is both true on the fiscal side and on the monetary side. And so what you can clearly see, I think it's pretty obvious today that governments and central banks will be extremely careful, and they will respond very quickly to downside surprises, downside shocks. But they will be much more reluctant, I think, to tighten if they see things improve, and for good reason, I think. So I think the policy response will be asymmetric, very accommodative for some time, and this will also be a support for growth next year and beyond. So if we look beyond 2021, we forecast GDP growth around 2.5% to 4%, both for the Eurozone as a whole and for Luxembourg for 2022. Beyond that, I think the long-term potential growth rate in Luxembourg is probably somewhere around 2% to 2.5%, probably somewhat lower for the Eurozone. So
the more people that will get the vaccine and the faster they will get it, the faster we will get our lives back and the economies will churn out growth again. That sounds very, very positive. Raja, what do you make of it? How do you position yourself, and what does it actually mean for your work as an investor?
Well, again, private equity is my filter, and it's very long term. So I like to agree with someone everybody knows, Larry Fink, who says short term he's a pessimist and long term he's an optimist. But I almost discount the short term, so I try to think 5 years hence and really allocate our capital to situations that we know may perform regardless of 2 or 3 or 4 or 5%. So to be honest, the macro outlook for me is a bit of a guide, but not a driver for decision making. This is again part of this granularity approach. But I would just say that in terms of portfolio allocation, because of the interest rates rather than the growth rates, the 60-40 allocation model for me is dead, because it keeps going down every year. And the only way to push performance up, and maybe Yves disagrees, is to allocate more to alternatives. Although I don't think private equity is alternative, but let's say to illiquid assets. And to wrap this up, it means that you shouldn't care about what happens to your performance in the next 3 to 6 months or even year, but you should look, to preserve your capital and deliver outperformance of significance over the next 5 years.
Yeah. Certainly, but you mentioned before also financial markets, and given how they reacted initially dipping quite strongly, then recovering quite quickly again, where the economy was still tanking. How do you see this? You wanted to comment on that before. Let's have that discussion.
While waiting with Keith, when the S&P 500 had the best month ever in November. This is US though, huh? So I think Europe is a different situation, but still I think it shows very easily that the excess liquidity doesn't flow through to the real economy, which I find a real pity, because that's what creates the disconnect between unemployment and the stock market performance. All this massive injection of cash stays with the financial players, whereas it should go to sustain innovation and job creation. Thankfully, in private equity, there's a lot of cash as well. And the other thing is volatility. If you can stomach it, well, fine. But this is not something that we like to account for. And I think, Keith, what was the statistic you mentioned?
Well, yeah, I mean, I was saying, just yesterday we've had a company that was IPO'd and its price increased by 86% on the first day. Now, it's a great company, I'm sure, but it's in the food delivery business. And I'm thinking, even with a big tech overlay over this and a change in model, something says there's a lot of volatility there, which I think needs to settle down at some point.
Yves, is it also not that the financial markets benefit from the fact that in an economy like the one we've seen, they are basically the only show in town next to alternatives? Will we see in 2021 an increased interest rates or inflation?
So I'll go back to something I said already. So I think that central banks were clearly erring on the side of caution in this environment. It seems pretty clear. Very asymmetric policy response, as I said. So they will respond very quickly if they see downward surprises. They will be much more reluctant to tighten if things improve. So as a result of this, we do not expect a rise in short-term interest rates anytime soon. So that's short-term interest rate, the traditional policy tool of central banks. Then there's the whole aspect of quantitative easing programs. So the programs whereby central banks buy government bonds, corporate bonds at very large quantities. So these programs have been reactivated with the crisis. The European Central Bank is doing this through its pandemic emergency purchase program, on which there will maybe actually be some new announcements following the ECB's Governing Council this afternoon. In the US, the Federal Reserve, the Fed, is buying $120 billion worth of securities on net every month at the moment. And again, I don't think these programs are likely to end anytime soon. What's also interesting is that, and this is actually, I think, a key point, is that the Fed in the US, the Federal Reserve, the US Central Bank, has undertaken a strategic review. And the ECB is about to do, or is undertaking its own at the moment. And they have actually changed, the US Central Bank has changed its policy objective to an average inflation target, which actually means that they're now trying to achieve inflation of 2% on average over a period of time, which means that if after a period where inflation has consistently been significantly lower than 2%, as has been the case over the last few years, they are now expected to let inflation run above 2% for a number of years after that to compensate, so to go to an average of 2%. So I think this is a key point in the current environment. And as I said, the ECB is currently undertaking its own strategic review. So against this backdrop, I actually think that inflation may turn out to be higher than what the market currently expects for next year. So why is this? So COVID has had actually quite a big impact on the supply side. So in the sense that you have had global supply chains that have been disrupted, in some cases quite significantly. You've had, on aggregate, less investment by firms over the last year. And you have some firms that will go out of business, have gone out of business or will go out of business. So this reduces potential output to some extent, at least in the short term. And against that, you have what I mentioned before, this pent-up demand, which will, in our view, lead to a very large increase in aggregate demand next year. So you have aggregate demand, which is likely to accelerate very fast, and at the same time, output may not be able to rise as fast. So which would mean that the output gap, as economists call it, could close much faster than usual, and therefore inflation could start rising a bit faster than what many observers currently expect. And that's basically what we have in our forecast. So we expect inflation in the Eurozone to, which is probably around 0.2% this year, to rise to 0.8% next year, and then 1.3% in 2022. In the US, we expect inflation to already be close to 2% already next year, and also in 2022. And as I just said, with the Fed's new objective, that will not mean that the Fed is going to tighten. So the Fed will probably in all likelihood, let inflation overshoot the 2% for some time. And I think this is an interesting point because it's not the current market consensus. We'll see if it's true, of course. And if it's true, if we are in the scenario, I think you could also expect long-term interest rates to start rising slowly. I mean, nothing dramatic, but gradual rise in long-term interest rates would be quite natural in this kind of scenario.
Okay. Keith, any reaction to?
Yeah, two reactions. One, I think I come to a similar conclusion to Eve, but based on a much more kind of primal approach. And the primal approach is the following. I think what we've just seen happening, and I think what will continue to happen next year, is that the involvement of governments in the economy has just shot up. They've pumped trillions into the economy, and I think they'll continue to do so next year. Most of those governments are borrowing to pay for this. And I think everyone is saying it's okay based on the premise that interest rates stay close to zero for a long time. And I think as a result, there will be huge pressure on all the institutions that control interest rates to keep monetary policy very, very relaxed. So I think if you have to play off against the two plagues, rising interest rates on government debt as opposed to inflation, to me it's an easy bet which one the politicians will go for. And while central banks are nominally independent, they're going to feel that pressure. Now, if I look at how that's playing out on what our clients are looking forward and saying, what are the investment products of the future? There's a big move into trying to design investment products that are very low risk, as close as possible to zero risk, but they yield more than zero. So you get core real estate, infrastructure. And in addition, there's this kind of thematic focus where people are looking at and they're saying, it's hard to figure out what happens to an office building. So guess what we're going to be doing? The buzzword is beds and sheds, which means residential, long-term rentals, and logistics, because guess where the winners are going to be in the economy. So I think all of this tends to point towards something like that. Long-term interest rates are going to stay low. And I think if there is inflation, everyone will just accept it as a necessary price to pay to refloat our economies.
Private equity has certainly been one of the beneficiaries of very low interest rates, given that many investors, and if you look at what banks did, especially in the wealth management segment, they offered private equity solutions to their clients. What will this mean for the private equity world?
The rise of interest rates or inflation?
The rise of interest rates, first of all.
Well, I think from going from 0 to 20 where they were, there's a wide range. I think LBOs, which is the segment most concerned with this, which of course in value terms is the largest, but in volume terms not so, are already preparing their game, and leverage ratios have gone down since the financial crisis. So the industry has become much more professional than in 2008, and the value creation has been much more focused on operational levers rather than financial engineering. So I wouldn't say I'm totally worried. And I think the GPs, the managers have got their act together, and some of them may actually welcome a bit of rise in interest rates for other reasons. But one good, consequence of low rates is the low cost of financing innovation. And if you look at venture capital, etc., I like that idea because in the last 10 years, venture has become much more mainstream, and I like that very much. So if tomorrow interest rates rise, it doesn't matter, but that has been a positive consequence of low rates.
We have definitely seen in Luxembourg a rise in the assets under management in private equity and in venture capital, but will that trend be reversed?
Of course not. I think it's just started. Because there is no alternative to alternatives. Because the lower volatility helps, because in the end, and that's my massive argument, it's about the real economy. If you invest in private equity, you're actually buying stakes in real businesses that create jobs, that employ people, and that create innovation as well. So I think it's only the beginning of the ride towards more, maturation of private equity. And forecasts talk about tripling the size in the last 10 years.
Okay. Before we conclude our discussion and get on to the Q&A session, there is one question that I think we should come back to. It has been raised, obviously, in the Prime Minister's speech, and it has also featured prominently in the first response to the Slido, and that is sustainable finance. This crisis has certainly accelerated a number of phenomena, and among them, sustainable finance, or at least the awareness that what we need to do is to build back better. We need to seize this crisis in order to make the world a better place, and the role that finance will play in that is very important. Where do you see in your areas of expertise sustainable finance? Is it going from the more decorational topic to really an operational, a strategic element of your business? Yves?
I think it's going to really move center stage. I think it's absolutely strategic, and I think that's, if there's one good thing coming out of this, it is an opportunity to put sustainability at the center of our thoughts, of our strategic reviews, and of our business plans for the next few years. I think companies and investors who ignore this, they really do this at their own risk, because I think the companies who are not prepared for risks relating to climate change, but not only to climate change, to ESG themes more generally, they will run into difficulties over the next few years, and I think this is something that is very, very important also for investors to take into account.
Keith?
Yeah, I would tend to agree. I think there's two sides of it. I think one is the kind of the profitability of doing the right thing and the risks of not doing the right thing. I think those are becoming more and more apparent, and I think the market's getting sharper at evaluating it. The second part is, I just think the shift in mindset of people, investors included. I mean, just this morning I was reading an article in the FT by Martin Wolf saying that Friedman had got it wrong on the purpose of the corporation, which I regard Martin Wolf as being a red blood capitalist to some extent.
The Business Roundtable has reverted that last year or the year before even.
Exactly, so this is part of a whole trend, and I think there's a realization everywhere that whereas this very dogmatic, hard-nosed view of business just being profit maximization might have worked 20 years ago and it might have made businesses more efficient, it just doesn't work anymore. So I think when you take the two elements together, I think sustainable finance, I totally agree with the audience who put it as 30% think it's going to be a biggest impact in their business. That's huge. We'd never have had that 3 years ago.
Good. Raja?
Well, I like to think that in our world, purpose drives everything, and purpose means maximizing value for the shareholders, but in the end taking the interest of the stakeholders at heart. And I hope that in at least the family office world that I've been working in for 15 years, we do this by default. I think from a more institutional GP standpoint, we're very pragmatic people in PE, and if you see that it actually goes to create value, you will adopt it. And the trend has been growing over the last 10 years. I think COVID has just accelerated it. So yes, let's go for it, but let's demystify what is behind sustainability. I think the speech of the Prime Minister was very sustainable, because he cares about people, he cares about taxes, and this is what we try to do every day in our job.
Good, thank you. Let us maybe turn towards the questions that the audience is asking, and our friend Mattia will have selected a few, and let's see what the audience has on their mind.
Yes, first question for Yves. So sustainable finance is not just about doing the right thing, it can also be profitable for businesses. Do you think banks should gear up and build more economically attractive and durable business models in the coming years? And how important is collaboration across the banking industry and government to move forward in this direction?
So I hope I will do the question justice with my answer, because there were quite a few interesting elements in it. So I think banks will have to play a very important role in this and have a huge responsibility in making this sustainability transition happen and making sure that this recovery, helping businesses and helping also individuals to make their investments more sustainable during this recovery. So banks do have, I think, a huge responsibility, and I think we're well aware of that.
Another question?
Still another question for Yves. It is now clear that COVID-19 has acted as a catalyst for digitalization. In addition to accelerating digital adoption, the crisis also served as a testing platform for banks, digital infrastructure. To what degree, in your view, will this increased digital adoption persist beyond the pandemic?
Let us maybe give that question also to the family office investor.
But Yves, please start. So I can hide behind you.
No, Raja, come on, ladies first, you go. Digitalization.
Well, it's there already. I think it started before COVID. I think it's very unequal from sector to sector, from region to region. I don't see how we can avoid it. At the same time, again, I like the idea of real and economy, and I don't think we can do everything remotely. I don't think we can do everything digitally. Anything that
And even
saves...
if we can, it has limits, as we all realize.
Well, I'm really glad to be here today with you live, despite all the restrictions, because I think the level of interaction and creativity is enhanced. So, for instance, in deal making, you may gain a lot of efficiency by onboarding investors, doing KYC related processes digitally, and I'm sure, Keith, you do a lot of that now digitally at Atos, but in terms of actually doing the deal, visiting the company, making sure that you're aligned with the vision of management, I don't see how this can be digital. And another little appreciation token to Luxembourg, I realized that since the crisis, you can do everything online as a citizen or as a resident, and I find that fantastic.
Well,
I couldn't do it before. Not
to
everything.
a very large degree.
Yeah, but much more now.
Okay,
Which
excellent.
is fantastic. So these kind of things that make your life practical, yes. Whatever has to do with human interaction and trust is impossible to digitalize. I mean, it's a bit of a common sense answer. But I'm sure Yves has a more
Keith,
intellectual approach.
Let's first hear it from Keith.
Yeah, my answer would be very much the kind of common sense practical one. I mean, I think clearly this has served as a crash course in digitalization. We've all been forced to do things that otherwise we would have thought about for 3 or 5 years. And I think it's great because I think it can really have benefits from an environmental perspective. But I do agree also there are limits. We're not going to a completely virtual world. If I look at it in our client base, again, the kind of more general partner group, they're saying one of the things that we really find difficult in this environment is trying to sign up investors who aren't re-up investors. So they're not existing investors. A new investor will look at your data room, it'll look at everything, but nearly all of them will want to say, I want to sit down with you and look you in the eyes, and that will never replace, in my view. So yes, we're going to make a big move forward, I think, and that's very positive, but there will be still this space for human contact.
Actually, I forgot something. None of us is a millennial, unfortunately, and I do.
You know.
I just guessed.
I just look old.
But what I hear from younger generations is, the drive of virtual everything reality, and I see actually virtual DJs, friends, and all kinds of avatars that actually make money online for real, and they're not real people. So part of me also wonders if we're missing the trend. If you look at Bitcoin at 20,000, crypto assets. Just wanted to open that little breach there. Sorry.
Yves, tell us about your experiences with Fortnite parties or...
No, I mean, I completely agree with what Raja and Keith have said. I think that there will be a mix going forward. I think that digital has accelerated. I think digital channels are clearly being used a lot at the moment. I think they will be used more going forward, but I think the human interaction will remain key. And I certainly know that we, as I think many businesses, we miss seeing our clients. It harks back a little bit to what the Prime Minister was saying. I mean, we miss seeing people, miss being able to interact with our clients, to see them face to face. And I think, and I hope our clients feel the same way. And I think this will always be part of a business. There's always going to be, human interaction will remain important, especially when it comes to more, let's say, discussions where you really need a real analysis, more complicated problems, where you really need to think through things, life-changing decisions. I think there it will always remain essential.
Yeah, and I think we feel it across all sectors. If I talk to insurance companies, they also say that it's very difficult to sign on new clients. So it's not only in your lines of business, but it's in basically every sector of the financial industry. Let's have another one of those very interesting questions.
Yes, another question for Keith, and perhaps also Yves commenting on that from an economic perspective. So The extraordinary fiscal efforts are likely to continue through significant stimulus packages that aim to place countries on a path of sustainable social and economic recovery. So can tax policy reinforce green stimulus and align traditional forms of fiscal stimulus with decarbonization objectives?
I think clearly they can, and I think there's a huge role for tax policy here. And one of the areas where you see an interesting kind of confluence of views is the whole area, for example, of carbon taxes. Because I'll let Yves comment on this, but I remember once having a discussion with an economist and saying, as a tax person, I'm quite into this. And he said, actually, as an economist, this is a very boring problem. Because he says it's so obvious. There's this negative externality. I just about understand what that is. And he says, you should price it, which means you should tax it or use a trading system, and then people will use less carbon. He said it's just so simple. And yet I think politically we struggle with it. But now the interesting thing that's happening is, I think with the new administration in the US, there's also an interest in whether you call it carbon taxation or the carbon dividend, which is a more libertarian view of the same thing. But I think everyone's arriving at the same conclusion, and I think there's a great responsibility we have all there. As a personal projection for next year, I also think there might be a trade between digital taxation, which we've made a kind of a totemic issue in Europe, but which I think is frankly immaterial. It's tinkering around the edges. And we may trade off this, drop our demands here and say, let's get something done on carbon taxes. So yes, I'm a huge believer, and I hope it does happen in a significant way in the next few years.
Yeah, so I mean, maybe I'll talk about businesses first and then about individuals. So business, I completely agree with what you said. And I think one important aspect is to get really to a global carbon trading mechanism that's really fully operational. And let's hope that the COP26 next year, so the UN Climate Change Conference, which will be held in Glasgow in November, let's hope that some progress can be made there on precisely that issue. So that's more on the business side. On the individual side, I think we know that empirically people respond extremely well to tax incentives. So I think if we want to, but this is obviously a decision for governments to take. But if you want to nudge people into actions that are more sustainable, tax incentives are certainly an avenue that's worth exploring, because we know empirically that that's something people respond to very well.
Raja, you want to come in, or let's get another question?
Yeah, more questions.
We have time for one or maximum two other questions.
Yes, another question for Raja and Yves, perhaps. So the pandemic brought M&A activity to a halt, given lower interest rates and lower demand for loans globally. In Europe, the lack of a banking union further creates problems for recovery prospects. Are Brexit and the pandemic a good opportunity to revive banking union in Europe?
Banking union is rather for Yves.
Just comment maybe on M&A then, because I don't see M&A having come to a halt at all. I think briefly in the second quarter there was a big stop to activity, but there's been lots going on ever since. That was a real V-shaped recovery. It's just different kinds of M&As, but I don't think there's been quite a stop to that. So, but I'll let Yves complete the rest of it. Yes.
I mean, I think there have been a lot of efforts over the last few years at the European Union level to move towards more of a banking union. I think these efforts will continue, and I think that's a good thing. I'm not sure that they will be particularly accelerated by the crisis. We'll have to see about that, but I certainly think the momentum is clearly there still.
I think this crisis, as you have said previously, was not a banking crisis. It's a crisis where the banks have actually played a very positive role. The banking union was something that stemmed out of a financial crisis, and in particular the weaknesses that were felt in the banking industry. If here we were to get towards a more difficult situation as a consequence of the restrictions, the lockdowns and so on, and we would see further weaknesses in the banking industry, there would certainly be certain screws that needed to be retightened and so on the banking industry. But obviously there are also some other more political, more principled questions that were being discussed just before the pandemic hit, and that basically have been put on hold until we are probably out of it. Good. One last final question. Make it a good one.
Another question then for Yves. Do you think the COVID-19 response and the European Green Deal need a new level of international coordination and joint action to be successful, such as new governance structures for new types of value chain and trade cooperation?
Well, I think that's very difficult to answer the question. I think those initiatives are not mutually exclusive. So I think there's a lot to be said for local initiatives. There's a lot that can be done locally that doesn't need international cooperation. I think that's, and we shouldn't underestimate the power of local initiatives. At the same time, obviously, it would be welcome if there was more global coordination on things like setting carbon emission reductions and things like that. I think we need to do both of those things in parallel, and we need to. I think what's more and more obvious is that we need to move faster globally, both at the local level and at the coordinated policy level.
I think we have seen in the last crisis that global coordination through the G20, for instance, have certainly allowed progress to be made. Let's wait and see until the new American administration is settling in, whether we will return to a more multilateral and cooperative way of going about this. Good. Thank you very much to all of you. This has been fascinating. Obviously, also my thanks go to our Prime Minister, who had been very generous with his times in sharing his views. I hope that we are all benefiting from the optimism that not only Yves, but all of you have been expressing shortly, because I think we all need it. We all need to see the end, the light at the end of the tunnel. We're in dire needs of some optimism, but here it was relatively clearly and I think in a very credible way expressed, and that is very, very heartening. I hope that our audience agrees with this. Let me thank also the audience for joining us today, for taking the time to follow us. The next episode in our series of Focus On will air on January 14th, and it will be dedicated to the private equity industry. So tune back in on January 14th. I would also like to thank our sponsors who have helped us in making this event possible. And I wish all of you and our speakers a Happy New Year, a happy and merry festive season, whatever the circumstances are. Try to enjoy it, and in particular, and that is the most important, stay safe. Thank you very much.